Hey Josh, nice to have you back. So what's going on with steel?
Steel has been pretty busy actually over the last week and a half here. There have been quite a few, well, I would say events out in the market that really kind of scared people. So there were some issues and some flooding out in Germany, out at the Salzgitter plant, which kind of originally was, it really kind of spurred some interest there in the EU HRC contract. And we've been trading at very low prices over the last couple of months. So it kind of scared the market and drove prices up a bit. But then a few days later, you started to hear that it was really none of their rolling mills or just the rolling mills that were affected. So the HRC price kind of has come down a tad, but it's still higher than it was a couple weeks back. The index jumped up by about $13 yesterday. So there was definitely some room there for positivity, definitely with air on the side of a bit of caution there. There doesn't seem to be that much actual physical demand at the time being as well. So it's kind of it's an odd situation out there. There is, people are thinking that there is basically less supply out there, but you've got Gijon and you've got Dunkirk coming on. So, this is going to add supply back into the market. And again, I think that it was just a little bit overdone there with the Salzgitter news initially. But in retrospect, that's kind of what's been happening here over the last couple of days. In regards to that, actually, I kind of wanted to go back to my positioning reports or my speculative positioning report, as I have noticed a kind of a further reduction of shorts in the EU HRC market, which has been then supported by obviously the price increasing and such. So I think you're also kind of starting to see the fund community who probably reacted as well to that news and to that kind of event-driven strategy there to enter back into the market. So we're about 1,000 short positions down from about a month, from about May this year. So we were at about 1,000 or 1,500 shorts. We're now at about 500 short positions out there in the EU HRC market.
That's a pretty sharp change there.
Yeah, that's kind of what I'm estimating. So net they are still short, but that net short is starting to see an unwind again over the last month. Or 2 months almost now. You've really kind of started to see a further unwind of the short positions in the EU HRC market. So there has been much talk about EU HRC kind of being at its low anyways right now, anywhere around these kind of low 600s, high 600s. People are starting to get a little bit more confident buying there. It will all really kind of become a little bit more clear in the upcoming weeks as we start to see what kind of demand actually starts to come in kind of the later stages of this month and of this quarter here.
Fantastic. So we'll have to keep an eye on that. Will any of this... All right, Josh, what about scrap? We haven't heard about scrap in a long time. How's it doing?
Yeah. Scrap's also been interesting. It was very much range bound over the last couple months. Anything up in the high 380s, really 390s. And if you got anywhere near 400, people were starting to sell, and they would kind of buy that back around 365, 370s. Really, the 370s were kind of a buy zone then. What you've kind of seen over the last couple weeks is you've really started to see prices actually come down quite hard. And the market is pretty convinced actually that this kind of 380-ish mark is really kind of where fair value is for the scrap prices. So scrap prices are, they're a bit depressed at the moment. Rebar prices are on their way down out in Turkey as well. It was down $1 last night on scrap prices. I think it was $4.50 on rebar, almost $5. But in general, there is a bit of pressure, but there isn't a lot of volatility right now in scrap. So it's not really moving heavily. In the derivative market, we're about $6 wide, bid offer, the bid-ask spread. So scrap is one of those where you're also kind of starting to see a little bit of, I would say, kind of physical interest coming in particular kind of towards the back end of this year, early part of next year, where you are starting to see some EAFs come in and take advantage of basically pretty low-priced scrap at the moment and wanting to lock in that price and lock in their purchase cost for, the early parts of next year and the very, very late end of this year. So I do think you're starting to see a little bit more interest in scrap. Yeah, there is going to be, I don't think there's going to be a ton of movement either way. Very, very much so kind of looks like it's in its fair value zone here to say the least. So that's kind of where we're at the moment.
Fantastic. So a lot going on with the EU HRC, US HRC, and the physical side of scrap, Josh. We'll have to keep an eye out on those. Hopefully you're back next week to give us an update on how things settled after the flooding.
Yes, absolutely, absolutely. This was also an interesting week, obviously, with the 4th of July being yesterday. Markets were pretty tame. There was nothing that traded absolutely at all yesterday.
Is it because
In
you
the
were
broker market.
partying, Josh?
Yeah, I was partying. No,
That contributed to the lull in the market.
absolutely, absolutely. No, with the 4th of July, the entire United States was out, so there wasn't exactly a ton of liquidity out in the US HRC markets, and other participants were a bit wary of this lack of liquidity on the day. So people were a bit cautious yesterday. Nobody was really going to be moving or showing prices very aggressively. Big CRU release day today again, first release of the month, so always gives us kind of an idea of where this front month July contract is actually going to be settling against on a month-to-date average. So very important release today. We'll see what happens. We'll
We'll be waiting with bated breath for your update, Josh. Thank you so much.